In the dynamic and ever-evolving Zimbabwean economic landscape, Zimbabweans are always proving their unmatched adaptability. What if there was a way not just to survive, but take back control of your financial situation, from surviving to progressing? Today we're unpacking real strategies and hard-earned lessons on how to make your money work for you and not against you. Stay tuned for today's episode of Cash and Chill. I'll be your host, Tinashe Mchelera, and I have some exciting things to share with you today. Cheers. What they don't teach you about money in Zimbabwe.
Of this world, very general rule. Don't make your rentals something like half of your earnings.
Yes. One of my favorite lines that you did say was, money follows ideas.
Money follows ideas. An innovative idea. The thing is for you to have something that people want. A vehicle is not exactly an asset. It just withdraws. If you can avoid it, don't borrow to consume.
Anyway.
It was no joker. What joker? No like card. No pick and play. We have Cooper. There's a microfinance institution. You can go and see Jade. Not Victor, but you can go and see Jade.
Welcome back to Cash and Chill. And on today's episode, what they don't teach you about money in Zimbabwe, I'm joined by the brilliant Mr. Traimo Mhlanga, an economist and strategist who understands the dynamics of survival in a VUCA environment. Welcome to the show, Traimo.
Thank you, Tinashe. Thanks for having me. I'm glad to be here. And indeed, I think I know a thing or two, but you see, as you just said, VUCA, the illiterate of this world or in the future are not going to be those that can read and write, are those that cannot learn, unlearn, and relearn. So we're constantly learning, all of us, one from the other. So at any given point, you can only claim to know what is finite, because the environment is ever changing.
True. I understand. I think one of the most important questions that maybe most Zimbabweans are afraid to ask out loud is, why is saving so important to us Zimbabweans when the traditional rules maybe don't apply to us the same way it would in other countries? What would you say to that?
Yeah, so I would start off on a lighter note. See, we always, by the way, as Zimbabweans, we always adapt, kind of jokingly sometimes. But there is a statement we use: living in Zimbabwe is a skill in itself. If I were writing my CV, perhaps I would actually emphasize on that, because just living in Zimbabwe in itself is a skill, because a lot of things that apply elsewhere do not apply locally. When you look at savings, so back in the day, when we were growing up, our parents, adults, they had mabook bank, and you would hear them say, "Mari iri kubereka," like posta mari bank, yobereka. So even in economics, we learn that money itself is barren. It doesn't bear children. So in Zimbabwe, the dynamics where they kind of differ is whether you can just save and actually get the money to grow just by saving, because saving could be translated or interpreted as setting aside. So I don't think that would work, because there is inflation, and we've seen hyperinflation in Zimbabwe. I would then say what's practical is if you're setting it aside, then invest it somehow. At least you can then be getting a return. The trick is, whatever return you're getting, let not that return be behind inflation. I think that's the rule of thumb. Whatever return you are getting, let it at least equal or beat inflation. Otherwise, you're not saving. So you would rather invest it. I would rather expound more on investing it than just saving it. Whether you are doing mkando, crowdfunding, or whatever, if you're setting it aside, you are bound to get a loss in real terms. So even perhaps even if you say some people think that you can't do it in local currency, then just convert it to US dollar and set it
And set
aside.
it aside.
Yeah, that's a fallacy. Why? Because even in the United States of America itself, the US dollar has got US dollar inflation.
Yes.
It's worse here in Zimbabwe. The information is public. When you look at inflation, US dollar inflation is actually double digit in Zimbabwe, which means 100 US dollars set aside last year is not equal to 100 US dollars today.
Yes,
exactly.
And you've alluded to the idea that the money needs to work for you, so to say, and not just lay idle.
Yeah.
That would then make savings meaningful. For majority of the younger population, the younger generation that look at saving, it almost feels as if in Zimbabwe it's not feasible, given the always evolving environment. This month is this change, that month is that change. What makes it important to then save when it seems like a long shot for most people in Zimbabwe? What makes savings important?
All right. So you say, I like something you said at the start of that statement. To make money work for you. So say, if I think a lot of us think that we should be working for money, but you can only get so far in life by working for money. The way this is very practical. It's not theory. It's not just something you read in the book. By money working for you, as the depends on what investment you would have done. For example, if you had put $1,000 in gold, maybe say 10 years ago, uh, how much would it be worth today? So it's not just saving. You're not setting it aside, because if you had set it in a safe, put it, locked it away, it would still be 1,000 US dollars. But if it were in gold, it would have then become several thousands and all that. So those are some of the things that you want to tackle when you're looking at how you can save and invest in Zimbabwe. The other aspect, I would just say, let not geographical boundaries limit you. I think that's the other challenge we mostly encounter. People think they are blinkered to think what works in Zimbabwe, what can I do in Zimbabwe, what is giving me the highest return in Zimbabwe. It's Zimbabwe, Zimbabwe, Zimbabwe. We are very patriotic, but I mean, like, everything is not just about Zimbabwe. You can grow, invest even across the borders. You can, even if you're starting a business, if you confine your market to Zimbabwe alone, you are actually quite several decades behind, because you need to be growing. Start in Zimbabwe, go into the region, go global. And nowadays, it's very easy, because if you want to be going global, there is such a thing as this. This thing, yes, and you already in investing international, or transacting, or doing business across the globe.
Okay. You mentioned some great points when you were explaining that it's not just about what you're just doing today. For example, the example that you gave with gold, that if it was $1,000 10 years ago, today it would be several thousands. And you shouldn't confine yourself to just thinking in the Zimbabwean manner, or Zimbabwe, Zimbabwe, Zimbabwe. You should also think abroad and look for opportunities abroad as well.
Yeah, exactly.
When you look back at it for maybe the average Zimbabwean, where there was a report I was reading online that was alluding to the idea that might be true or false, right? But it was alluding to the idea that the average income of an average Zimbabwean person who's formally employed, at least across Harare, was about $583 per month, right? What kind of practical ways would that person then balance their responsibilities, their needs, and make it in somewhat way to work while they're also saving if it makes sense. I've catered for my needs. I've catered for this. I've also managed to have some savings to then invest.
All right. Yeah, that's an interesting one. First off, to just say, yeah, I don't have the exact figure, but yeah, even $583 is on the high side.
It's even on the high side.
Even considering Harare alone.
Yes.
But I would have put it more conservatively. Between $200 and $300 or thereabouts, but I didn't bother with the specifics.
But maybe you can break down that 300 for us.
Yeah. Now, the reason why I said living in Zimbabwe is a skill is because there are a lot of us who earn perhaps below the poverty datum line. The minimum required perhaps for a family of 5 or family of 6, depending on which basket you're using.
Yeah.
Is it Simstat? Is it Consumer Council of Zimbabwe? Yeah. But you see, even with that, you find everyone more or less reporting for work every day.
Every day, yes.
And they having something for lunch every day. Their kids are going to school every day. Some going to boarding school and all that. How do we do it? So, yeah, there is a number of ways. The adaptation that I said, when things change or prices go up, we somehow adapt. If the price of bread goes up drastically or the exchange rate overnight, like happened a few months back, it's 18 point, then goes 26 or something like that.
Yes.
We just say, oh, that's what has happened for a day, 2, 3. By the end of the week, Zimbabweans have made a plan, and things are more or less back to normal. How do you do it? We have mastered the concept of side hustles. I think that's what I could say, whereby a lot of people don't just depend on the income they get from employment. Mind you, also the other dimension you see is that a lot more of us are informally employed, self-employed than are formally employed. I think we may need to change the definitions of formal versus informal in Zimbabwe, because I think there are some people who may not be very amused to realize that us as banks, as financial services providers, term them or categorize them as informal. But they making money. So it's the side hustle for me, I think, in the main. Find something that you're good at, a skill. So education alone is not enough. What matters is the skill that you can actually monetize. And contrary to a lot of misconceptions, you don't always need huge capital for it, because money follows ideas. So to answer you in short, one needs to have something on the side. Now, this is something you find in theory yet again, but very practical in Zimbabwe. They say you need, some say 7 streams of income. You can't just depend on one. That's theory, business theory and all that. But it's very practical in Zimbabwe. And as I was just considering where we say formal, informal, so that's also how you get things perhaps that have a certain intention. Let's talk about monetary policy, increase the rate or interest rate with a certain outcome in mind. Then perhaps the transition mechanism doesn't always work as scripted or translate. Why? Because we are more informal than we are formal. There are those that just do things for themselves. So it's different when you are more or less guaranteed of a salary.
For salary, yes.
And when you know that for the family to eat, you have to kill something. Yeah. So I don't know if you see the dynamics.
Yes.
Not everyone works on commissions and all that. Those who can slacken, because I mean, my 200, my 300, my 500 is coming.
Month.
But if you are more informal, like we are, so it means there is a lot more of us who would really need to, if they don't work, there is no salary or something like that.
Yes.
Yeah.
I think that's a very valid point, because you'd see that the average families in Zimbabwe, they are really living on that notion of you eat what you kill today.
Exactly.
So people are having to do a lot of things outside of their jobs, if they even have jobs, to sustain their families on a day-to-day basis. There's a rule, the 50-30-20 rule, on how maybe people were traditionally advised to save, right?
Yeah.
Where you'd set aside 50% of your salary for your needs.
Yeah.
You'd set aside the 30% for your wants, and then the 20% for your for your savings, or what was meant to be your savings.
Yeah.
Until you get to a point where maybe the savings have compounded, and now you can invest in a side hustle. Maybe the target was 1,000 or something of that sort. It was a question I was going to ask, but you kind of touched on it already, given the fact that it might not be practical, since some people don't have a salary that's guaranteed to come at the end of the month. So they can't necessarily plan accordingly to say, since the 300 is coming, 150 is going this way, this one is going that way, this one is going that way. But is there another way maybe people can even apply that rule, the 50-30-20 rule?
Oh, thanks for that. Yeah, so it's still applicable. It's just the dynamics that vary when income is certain and when it's not so certain. And by the way, even so, when we think informal, just to demystify something, we think things that are done under a tree or whatever. It's not always the case.
Yes.
So somebody is actually it's just doing things, because for business to grow, you have to be following business principles. Yeah. So there are certain principles that you can't ignore.
Yes.
For example, to digress a bit, as long as you're in business, you would really need to understand that what remains with you is just the excess of revenue over your costs, to put it simply. So that's a rule. So if you expenditure, if you don't have a look at your expenditure. So I'm just saying there are certain rules that somebody would be looking at, even if they are kind of informal and all that. I think what can be done, there is a view which says rather than save what is left after consumption, you should consume what's left after saving. Yeah. So you deliberate about it. You are very deliberate about it, because the downside with setting aside something after consumption is sometimes you get to consume too much. You enjoy your consumption that much, and perhaps you don't always. Yeah, but I know that sounds like a little bit on the theoretical side, so I'll not say too much about it. But yeah, there is always a way of juggling and ensuring that you do have something set aside for a rainy day. So if your income is not very certain, kind of fluctuates like that, perhaps it's seasonal. What you need to then do, which is also very practical, is to match your patterns to your income. If your income is seasonal, then match your, for example, if you were to come to the bank, I'll just use an example that we all understand, and you're a farmer, and you get income perhaps seasonally when it
tobacco season.
Yes. It means as a bank, the bank will not be giving you a loan that you're supposed to repay monthly, because you don't get money every month.
Yes.
Yeah, so it can be a bullet payment when you sell your crop, or if it's quarterly, you can have quarterly repayments. Take schools, for example, that's another good example. So they receive money peak when schools open. That's your January, May, September.
Yeah.
If they have borrowed, they match their repayments
structured across
structured across the business. So now, if you're doing it as on an individual basis, you need to discipline yourself. Yeah. So even ants, ants must also know how to set aside something for a rainy day, because you see them carrying heavy loads, storing it somewhere, because they know winter is coming, like they say in Game of Thrones. Yeah, sure.
Yes.
Yeah.
Yes, it seems like a very practical and doable thing. Maybe, just maybe, the counter argument that someone might have is things are tough in Zimbabwe at the moment for maybe the average person.
Yeah.
Right. So they're looking at it. I've earned my $300. I have my rentals for $100. It's me and my family. I have all these expenses at the end of the month. Maybe, just maybe, after I've taken care of all the necessities, just basic necessities, food, water, drink, I'm left with $20.
Yeah.
Is it worth me saving this $20, or I might as well go and have a drink or two or something of that sort? Or maybe I'm left with nothing and I want to build something out of myself, but there's nothing there. Are there any practical ways they can maneuver themselves out of that situation?
Okay, so let's just talk about something you said.
Okay.
If I'm earning $300, so that 50, 30, 20, or those rules would still apply.
Okay.
As a very general rule, don't make your rentals something like half of your earnings.
Yes.
Something.
Some people
they have to be a reasonable proportion. Why? Yes. Because these are recurrent expenditures.
You can't run away from.
Yes. So the old adage, or where you must chew or bite what you can chew, comes into play. So the challenge that we have, a lot of us, is wanting to live beyond our means. So that principle holds fast in theory, in practice, in the United Kingdom, in United States, in Europe, in China, in Zimbabwe, in South Africa.
Yes.
If you gonna live beyond your means, you are inviting trouble. So whatever you earning, or whatever your earnings or income, you can structure things such that there is something left. That's quite practical. Yes. Because you see, lifestyle is one thing, is one of the things that kill us. Let's look at competition is another. Yes. So if I'm earning $300 and you are earning $1,000, before we start about investing or saving on whatever, already where we stay can actually be different, because I would have to be staying somewhere where, if you work out let's just say 25% of my income, 25% of 300 would be something like $75.
Yes.
So as a rule of thumb, I have to be staying somewhere where perhaps I'm paying in the range of $75 or $100 for rentals, maximum or something like that. But you can stay in somewhere you are paying $200 or $250 because you can afford it. So it's just that difference. I think that has to be very important. Yes. So where you send your kid to school and where I send mine with 300 and you with 1,000,
then has to be different.
Then has to be different, unless, of course, I have something that I'm doing on the side, which I should anyway, to actually supplement what I'm earning. So that aspect is a rule of thumb. Live within your means. Don't compete. your biggest competition should be with self. That's a principle
very
you should live by. Because if you don't do that, you run into all sorts of challenges. That's how you end up with people who are working, and in Shona, it's as if vari kushandira ngozi. Cause anotengesa madhoiri sevamwe asi chabuda hapana, but somebody else selling madhoiri or anotengesa mafreezer is actually able to send kids to school and be able to save something and build their business. So I'll come back to something I said already, which I was saying, nowadays, there is a lot of opportunities. There are guys who are making money. I was looking at some content creators as an example. I know it might be quite unorthodox.
That's actually what people are consuming these days. This is where the world is going.
Yes, it's Zimbabweans. Just a lot of them are on their phones, they're on social media, and by the way, some of the guys who are making money, they're making it on TikTok. Somebody has their phone. So you don't. The opportunities are many. That's all I'm saying. Yeah.
Okay.
Opportunities.
I understand. So we've kind of broken down some of the myths that are there around the topics of savings, whether some of the theories have any practicality to them, or it's just things we say to motivate each other to keep going. Maybe a practical way to look at it would be, as someone who we've said is very well versed in the strategies of how to actually survive in a volatile economy like Zimbabwe, if you were the one maybe holding $1,000 in your savings, what are you investing in today? Is it gold? Is it real estate? Starting a side hustle? What are we looking at if you were the one with $1,000?
Thanks. To be unorthodox and practical and also pragmatic, I wish you would have added an option like Bitcoin.
Okay.
Because when you look at all the investment options we have, none of them beat Bitcoin. And I know I already said unorthodox, but because in Zimbabwe it's not regulated. Anywhere else it's not regulated anyways. But I know a lot of people who are also doing it, and they make quite a very impressive return, more than any of this. But to just then come back to the orthodox, you're talking about Zimbabwe, you very seldom go wrong with real estate.
Okay.
You very seldom go wrong with real estate. Of course, the dynamics around demand, prices, and all that will always come into play. But real estate is something that somebody can invest in. But I'm mindful of that you said $1,000.
Exactly. I was about to get
$1,000. Yes. So there is a limit to what you can do along the lines of real estate with $1,000, which is why I said Bitcoin. But now let's talk about gold. So gold is always considered a safe haven.
Mm-hmm.
And yet again, if you had invested in $1,000 in gold, maybe 10 years ago, today, yet again, it would have been several thousands. And going into the future, it might actually become $1,000 in gold, because the price of gold and can be anyway, including up to 5,000 pounds or something like that. So, but there are risks on each. There are always risks. For example, and pain points. Example, you look at gold and say, are you buying physical gold? What does the law of the land say? Are you allowed to do that? There is gold coins, and then there is the electronic ones in Zimbabwe and all that. And where we were talking about how little you can invest, you will find that what the central bank has also attempted to do is to make it feasible for everyone to invest.
Okay.
Because with the electronic gold
Gold,
coins,
yes,
I'll just use that word
yes.
loosely,
Okay,
so that
that's
everyone
okay.
understands what I'm saying. You can buy fractions so it doesn't have to be much. I think then with $1,000, yeah, orthodox, maybe gold.
Maybe
Yeah,
gold.
yeah.
Given that it's something you can actually invest even with as little as $1,000 because you're just
Yes,
buying a fraction of it.
yes,
And
yes. And it can, yeah, it's money working. It's just working. You're doing nothing about it. I know with side hustle, the opportunities are quite big, but the risks are also there
yes,
because businesses started. Maybe you look at Econet. Econet was
yes,
started in the 90s. I think they got their license around about 98,
yeah,
which is what, perhaps 27 or whatever years ago now.
yes.
But look where it is. You look at
It's
a
really grown,
business
yes.
like Nyaradzo, yet again established more or less around just before the turn of the millennium. So in 25 years, multi-billion business and all that. So yeah,
Okay,
depends what you're good at. Yeah, I think
all
a
right.
lot depends on what you're good at. Yeah.
I think you touched on some very key points. The orthodox gold would be a very safe option. Real estate is also something you can look at, even at $1,000. I've heard people rent houses just to rent them out again,
Yeah.
which could make you money just for premiums.
Yeah,
And
arbitrage, brokerage.
exactly, as well as Bitcoin. So I wanted to quickly ask about that because it's a very unorthodox thing to say. You mentioned that people are having good returns on Bitcoin. Is it necessarily with the mining or the trading itself? Where mostly does it lie?
I think the short answer is no, a bit of both. Because even if you were trading, you would need to know when to buy and when to
And to sell.
dispose.
Yeah.
For example, this year alone, when you look at the price of Bitcoin, which is also the other downside,
Yeah.
it's a little bit too volatile. It fluctuates, goes above 60,000, goes down to 30 something thousand, goes up to 38,000 and all that. So if you had a position, perhaps you could have maybe you can fall flat on your ground. So whatever you do, you just need to understand the market.
The market is.
But so I would say a bit of both. Where I was saying somebody who invested $1,000 in 10 years ago, yeah, right now perhaps just invest, buy, keep it.
Yeah.
Today worth maybe something close to I wouldn't know. Maybe you're talking 100,000 or thereabouts. Yeah, it could be more. So, yeah, trading, mining, yeah, you take your pick. Depends what you know. But you must invest in knowing. You must
Another skill
invest
set, yes.
in knowing and getting the skill. And nowadays, it's so very easy because, like I said, with your phone, you can choose to be following comedians and laughing the whole day, or you can choose to be learning artificial intelligence. You can choose to be learning coding. You can choose to be learning baking. I know people who now do cake baking.
Yeah.
They didn't have that skill. They just learned following lessons online.
Yeah.
So the same applies to things like Bitcoin, cryptocurrency, and all that.
Yes.
Yeah.
And I think with business, this has been traditionally something that has been tried and tested. You did mention companies like Econet, where now they're probably near 27 or so,
Yeah.
and they're flourishing from where they started.
Yeah.
And the person at the steering wheel, Strive Masiwa, is one of maybe the best case studies we've seen of entrepreneurship intrapreneurship and entrepreneurship in Zimbabwe.
Yeah.
Is there something people of his caliber know that we don't know as average Zimbabweans? How does he think, or What sets him apart from us, or individuals like that from us?
There is a lot. I think something might actually appear, trivialize it.
Yeah.
There is a lot, because a lot goes on in the mind. Like I was saying, money follows ideas.
Okay.
So money and capital and all that, if you have an innovative idea, the thing is for you to have something that people want.
Okay.
Or what challenge are you solving?
Yes.
What way of doing something differently? So a joke says, between lazy people and those that are kind of hardworking, which would you rather have if you are in a work setup or solve problem solving? You'll be surprised to know that it's actually the lazy guys, because they think of a way that would
requires less effort.
Less effort. I'm always saying, why should we be doing things this long way? There should be an easier way, so that when they are done, they sit and play. You ask, the job, the day's work is done and all that. Yeah. So to answer in brief, I think the aspect of money following ideas is what mainly sets them apart. So they had an idea, think about Econet. At the time, they started off as the smallest of the three that were there, struggled to get the license. When they got it, didn't always have capital, but in certain instances, if you follow Strive Masiwa's podcast, what he writes on his blogs and all that, very insightful. In certain instances, he talks about, how they got capital when they didn't have it, through franchising, where people pay, are taught how to be agents and all that, and use that capital. You already recapitalize the business. The other aspect I was reading about his writings, what was quite interesting, was saying everything and anything can actually be made into a multi-billion or multi-million business. So he says there was a time in the US, or one of the developed countries, I was talking about something as mundane as a barber or a haircut and all that. So you're saying there are those that do it just like the way McDonald's do, like you have outlets across the world or whatever, same standards, you see? Like you go into KFC today. You go into KFC in Harare, you go to KFC in Bulawayo. If you don't know, you think it's the same. Sometimes you do, aside from perhaps the surroundings or maybe the color of people, you might say, you realize this is Zimbabwe because you have blacks, more of blacks. Perhaps in the UK, this might be a different setup, was more. But aside from that, it's more or less the same. So I was talking about how with a trade such as cutting hair, clipping hair, or styling hair, you can actually grow it into a So they know quite a lot more out there about money matters and how you can make money. Look at, I'll use the other example we have used, Nyaradzo. Mr. Mataranyika was employed. He was at Old Mutual, and when he left to start Nyaradzo and all that, there were already companies that were in the same business. But the trick was to find a way of customizing the offering. So making sure the voice of the customer is what dictates what you're doing. And if you do that, you not only grow, but you overtake everyone who was there before. So it's not theoretical that you can establish a business today that grows to overtake established businesses that are already there. Talk about Branson and Virgin Atlantic, British airways and all that, yeah, can grow and beat whoever is in the game. It's your understanding of money and financial literacy to understand money. So if you are like somebody who used to say, I had a friend who used to say, you see, people say money talks, but it seems like mine always says goodbye. So that aspect, if you one whose money always talks by saying goodbye, then you are in challenges.
Yes.
So you have to understand money to make money. Yeah.
Yes. I think one of my favorite lines that you did say was, money follows ideas.
Money follows ideas. Yeah.
To sort of bring it home, in a situation or in an environment like Zimbabwe, it's very chaotic. But amongst that chaos, where there's chaos, there's opportunities, because problems arise, and once you manage to solve that problem, that's the opportunity, and money will follow that idea. But then begs the question that then follows that. For the average person, how can I make money if I don't have any capital, so to say? How would you answer that?
Okay, so your starting point is to say, what do you know? Like we have been discussing, what skill do you have? Even if you go in the Bible, I know we are a Christian country.
Yes.
I'm not here to belittle any other religion, but we are a majority Christian country. Even in the Bible, Moses was faced with the Red Sea. It says, what do you have in your hand? Just a rod. Use that. Look at the feeding of the 5,000. What do you have? So I just used those because I know a lot of people understand those principles. It starts with what you have, what you know, what you can do, and marry that to what is required at the given point. What is the pain point that people mostly have, the majority have? If you can find a way for people to cook sadza without putting in an effort, maybe it like some of the youth would say, they do their guy, you see. I just use something that we can all identify with. We all eat sadza and all that. If you can find a way of making life easier for people, like they have this very difficult thing they are faced with on a daily basis, and you come there and you say, hang on, I have a very easy way of doing this. The idea is here, and I can make it practical. I can actually save a lot of effort doing this way. So I may not give you exact examples. Why? Because if we were to attempt to do that, then perhaps we lengthen our discussion. But the trick lies in, what do you know? What do you know best? What skill can you utilize? And then how do you solve people's problems? If you have that, investors will be attracted. People will come and say, your ideas are innovative, and would like to see how we can.
And the way you're explaining it, I also understood that selling convenience, because you said, if I come and do this for you and save you this time and this and that, and that. Sometimes even without capital, you can come and save me convenience from a plethora of things that maybe I might find tedious myself to do, but I'm willing to pay for someone else to more or less do them,
Yes. So, yet again, to use a cliche, we pay for what we don't know. So something that I don't know, you show that you can do it, I'll pay for that. I think that's basically the principle.
Yes.
Find something that people would want, and they will pay for it.
Yes. Also, when we're looking at the budgeting tips that we've been sort of playing around with the topics and discussing today, what's one budgeting move that could potentially save the the potential listener hundreds of dollars maybe this month, or just a little bit extra more? What's just one budgeting tip that you could share with us that you think would save someone a bit more money?
Okay. Perhaps I can use two. I'm usually unorthodox. You ask me one, I don't stick to the rules. One could be simple, practical. Do it yourself. Do it yourself. So we have this tendency of just like, okay, I'm a man in a suit and whatever, so I don't get my hands dirty and all that. But that's the wrong way of doing it. There are certain things that you can do it yourself and save yourself quite a lot of money. The examples are many.
Yeah, of course.
I've seen guys and friends who go to the extent of saying, no, minor service for a car. Why should I take it to a mechanic? So that's also rather unorthodox,
Yes.
even by my standards.
Yes.
So somebody, you see, sometimes people pay for very little things. Yeah, like I'm talking about car service.
Yeah.
Somebody uses a car for a few years. There are things you should know how to do, and not pay.
Yes.
Yeah, so there are guys who pay to have a flat a tire changed and all that. Shouldn't be doing that and all that. But around the house, there are a lot of things you can actually be doing and not be inviting somebody to do for you. Then the other one, yeah. So a lot of us, by the way, a lot of us drive cars to work, and in certain households, you find, I think we think it's a sign of having made it, that dad drives by himself to work, mom drives by herself to work, and perhaps a child also. Yeah, I'm not saying it happens everywhere, but it happens sometimes. And if you can't afford to drive, then just catch a combi and you go 50 cents, $1 to and fro, rather than $10 of fuel and all that. That could potentially save you money. Yeah.
Yes. So it sounds like the small shifts can actually have big impact on your savings. Small changes that would compound by the end of the month. And, if you change this thing, you change this thing, you change there, you compromise there, compromise there.
Yeah.
By the end of the month, you would have something a bit more meaningful in your savings tank.
Exactly. For example, if you have a small piece of land, some actually cut tires. They don't have land, cut tires, grow their own vegetables. If you can, over a month, you are not buying vegetables. Over the whole year, you have a small piece of land, even urban farming. You grow your own maize. You don't have to buy meal and all that. You save. Yeah. Yes. Do it yourself, like I said.
It also kind of goes back to the issue of lifestyles. Do you think lifestyles are something that might be keeping other people secretly broke? They don't realize it because they're living in this lifestyle that alludes them to.
Exactly. So a lot of things that some people don't know is so a vehicle, unless you're an Uber driver or you're a combi or transport person or whatever, a vehicle is not exactly an asset. It just withdraws, it just debits. So we tend to think that you are measured by the type of vehicle you drive and all that. A lot of people are stuck with vehicles they cannot afford. It's just a lifestyle issue, whereby if somebody gets something like, let's say they've got 10,000 US dollars, rather than perhaps buy a stand somewhere, develop it, and with real estate, the moment you purchase, its value is going up. Before you build, you start getting rentals. Meanwhile, the value is also going up as well. The opposite happens with vehicles and phones. The moment the plastics are removed, the value keeps going down. So lifestyle is one of the things that a lot of people don't realize. Like, and then the competition that I said, keeping up appearances rather than cooking at home for one to show they've made it by always eating out.
Yeah.
Not only are you eating into your health is your wealth, you also just eating what you cannot afford. When you're going to work, if you can carry a lunchbox, why not? It doesn't mean you are poor. It just means you're conscious of how you're spending, how that your lifestyle can make or break you, rather than spend $25 every day to buy food elsewhere. You just bring it from home. It then goes back to do it yourself. Yeah.
Yes, I think doing it yourself and living within your means, which is something you've also spoken about, is kind of something that can separate you from having small things in your savings account to at least a much more meaningful savings account, relatively speaking.
Exactly.
Yes. And then, what's a realistic monthly budget for a young professional in Zimbabwe today? What could be something they could potentially look at or aim at?
That's very tricky. But
maybe without specifics.
Yeah. So what they need is perhaps somewhere to stay. So they need somewhere to stay.
Mm-hmm.
Then they need their transport to and from work. We're working with hypothetically somebody who's working, and they need their food. And in all of these, the principles we're talking about will apply. Okay. So don't let the rental exceed the 25%, 30%, or thereabouts of your income.
Yeah.
In terms of transport, yet again, live within your means. If you can, I know we have challenges here and there with safety on the roads. Sometimes combi drivers and all that, I know taxis and stuff. But if you can go by combi, just do that. If you cannot afford a vehicle yet, then don't, and all that. So your transport, your accommodation, your food, your clothing, and all that. Number becomes tricky because a lot then depends on what you're earning.
As a very unorthodox man, you mentioned something at the beginning of the podcast that I liked. You said, eat after you save. It was something along those lines. I forgot the exact wording you used. But it was save first, eat what remains.
Yeah, exactly.
Would there be a percentile maybe in that theory, an orthodox theory, that you'd say, if you can, save, say, 20%, 30%, save this percentage and try to fit everything else there?
Yeah.
If you're taking an orthodox approach.
It's a bit of a challenge there, but maybe 25% sounds like a good number, or something. Although I know that if you are applying it strictly, say consume what remains after saving, it gives the impression that the saving is bigger in terms of proportion than the consumption. So perhaps something in the region of 25% might be realistic in Zimbabwe, because you also have a lot of obligations. And then perhaps something that I also meant to say around saving, investing, and consuming. If you can avoid it, don't borrow to consume. Don't borrow to consume.
If you can avoid it, don't borrow to
consume.
Yes, I think it touches on the point that you mentioned of living within your means. But sometimes when people borrow to consume, it's usually to keep up those appearances or to maintain things that necessarily can be maintained on their own, and now they need to borrow until they make other things necessary.
Exactly. And by consume doesn't just mean eating, like physically like this. Consumptive just it means quite a bit more. If it's something that just recurrent, so to put it broadly, it's also a bit on the consumptive side.
There's no return to it.
There is no return to it. But like we were discussing, what the money guys know that a lot of people don't know is, in a lot of instances, they don't even grow using their own money. So there is any number of ways of doing it. Just contrasting. There is the one that borrows to consume. That's the one that doesn't understand money at all. Then there is the one that borrows in order to grow a business. So they use other people's money, whether it's debt or it's equity or it's whatever, but it's not their money. Because if you wanted to do it using your own position, chances are you limit the extent to which you can actually grow. So if you can avoid it, don't borrow to consume.
Would you say that's the one rule about money you can say?
Exactly. I'm not going to give another. I'll just say if you can avoid it, do not borrow for consumptive purposes.
Yeah, I understand. I think also given your position with where you work, we've talked about a lot of things along budgeting, saving, starting your own business being something that's very important, side hustle, and we talked about sometimes you need capital, sometimes you can also look at what's in my hand. Right?
Yeah.
All of these topics that we've sort of touched on. As one of the executives at ZB, how does ZB fit into all of these aspects in any way?
Wait, what's it? ZB no joker. Kepele, juve. Of what joker? No lucky card, no pick and play, no Messi and all that. No joker. So it's a variety of solutions. By the way, it said we don't believe in products, we believe in solutions. We are tailoring solutions. We solving a challenge that's there. It's not a problem, it's just a challenge, and for us it's an opportunity. So depends where you're coming from. We have Cooper, there's a microfinance institution. You can go and see Jade, not Victor, but you can go and see Jade. Then I can give you something. If you think that's a bit on the expensive side, then you can go and see under the banking cluster. You can talk to the bank at ZB Bank, and they will assist. There are also any number of investments. You recall I was saying, rather than saving, I would rather marry savings to investments, because investment is where money will grow more. So it's saving, but you also investing. It's set aside, but it's invested elsewhere. We have our investment arms under the investment cluster. They will assist you. And naturally, what you want to do is in business or in life, don't be like a sieve. Remember, we're talking about one principle: your revenue and your cost. Roughly what you remain with. So if you have a bucket that has got that leaks, you are pouring, it's leaking. So in order to avoid those leakages, you go and say, insurance guys, they will assist you so that you safeguard the assets that you are creating. Safeguard them through insurance. Exactly.
Yes, you've mentioned a lot of beautiful solutions, not products.
Solutions.
So you have the Cooper and the bank itself that offer loans for maybe businesses and even individuals as well. And with the investment arm, and we also have the insurance at ZB. And also there's the payment gateway.
Payment gateway.
I wanted to ask you about that one.
No, so like I was saying, you get things happening on the. Have you noticed people love their gadgets, their phones? So everything here, and like I was saying, with the payment gateway, so you look at what some scholar once said, which applies. It's a bit unorthodox yet again, but it applies. He said banking is necessary, but banks are not. So if you want to continue as a bank, even us as ZB, what we need to be able to do is to go with the trends. Go with the trends. If you're going to wait and wait for somebody to bring a deposit in a safe or in a bag in this day and age, you become irrelevant as a bank. So people want to do their payments. People want to do, and the convenience that we're talking about is what the payment gateway does give you. So you can do regional, you can do international, you can do whatever, as long as you have you're doing it online. And I think it's gonna be quite a game changer. It's quite a game changer.
Looking at it, I was looking at it from the angle of, if I'm a business owner and maybe I'm frustrated with slow and unreliable payments, and it sort of became the solution to it, given that you can receive payments from Visa, MasterCard, One Money, Cash.
Exactly.
Everything is under one roof, and you don't need multiple accounts for it. It's all in one place. Everything you have linked in. So it makes it easier to even grow your business digitally.
Exactly.
Save more customers, so to say, in one go. So I think people need to watch out for that. It could be a game changer, especially for people opening their businesses and side hustles and all of that stuff. So
watch that. Watch the space.
Watch the space.
Yeah, sure.
Anyway, thank you so much, Trimo. It's been an absolute pleasure talking to you. Thank you for taking the time to speak with me. It's a very interesting topic. You shed some light on some very, very good points, some troubling questions, and you had some unorthodox approaches to them as well as orthodox approaches. So really appreciate your input. And to the audience, thank you so much for tuning in. Hopefully you join us next time on Cation Show for another exciting episode. We'll dive into something even more interesting. Cheers.